months ago, it was below 20.
Okay, so that's the author of the economic survey, and the thrust of his survey was that there is fiscal space for capex. So that's one thing people will be watching, equity markets will be watching very closely. But we have an equity veteran with us, so let's ask him. Sandeep Bhatia, the India country head, Macquarie Group, joins us now. Sandeep, good morning. Thank you very much. Top 3 things you'll watch in the budget.
I'll watch the total borrowing number.
Okay.
I'll watch the capex, and I will look at the spending in the rural areas. So that these are the top 3 things. I think India is in a good place, much better than anyone would have thought a year ago or when the pandemic started. We have to build on that. The resilience shown by the economy is as good as the resilience shown by the population to match the pandemic, and we have to definitely build on that. That's imperative.
Okay, but what is a good borrowing number or deficit number? You can, of course, equity markets can worry it is too small and therefore is not stimulating the economy enough. But the bond markets worry it will be too much of borrowing that they have to eat up and they don't have the appetite. So what, if it's a 12 lakh crore borrowing, if it's a 15 lakh crore deficit, what's a good number?
Growth in nominal terms, so up.
Yeah. Can you repeat that? We lost your audio a bit.
A borrowing number which is up around 12 to 15% in line with the nominal GDP growth would be a good number. I think we also have to remember that we could see opening up of investments in Indian bonds. Indian bonds would be part of global indices. That would also increase the flows. And that would be one big structural change which can happen. We all know that the global bond markets are bigger than the equity markets, and the flows that India can get are significantly bigger. So that is one more thing which I'll definitely watch for.
Okay. Sandeep, good morning. Let me extend that theme since Lata asked you what are the top 3 things that you'll keep an eye on. What are the 3 big sectors or stocks that you will have on your radar as we head into the budget?
I think the sectors and stocks that we look at is the consumer sector, which has been underperforming. So we definitely want to see consumption get a leg up, especially rural consumption. There's, of course, we all look at what happens to taxes and excise duties and GST on cigarettes. So if that changes, but it can happen outside the budget too. So we'll see if anything changes there. The other thing which we will definitely look for is the entire capex side, and to see if the road building infrastructure is something which sees more impetus. Capex sector, L&T are the stocks definitely that one should look at. And then, of course, the banking sector. It's an old favorite of everyone. And I think that sector will also be watched.
Sandeep, on divestments and specifically LIC, right, on the insurance side, are there any expectations? I mean, the government is keen to get that through.
Yeah, we know as much as you know, which is the government is keen to get that through. I hope it gets through, but definitely will get through by the first half of this year is what the market expects. So if it gets through before March, then it's fantastic news. But it's definitely more importantly than just the timing is the valuation and the amount of money that is collected.
Coming back to the sector, Sandeep, hi, good morning. You spoke about capex-related sectors, you spoke about banking. The 2 other spaces where there's a big thrust expected is renewable energy and electric vehicles. Some tax concessions expected, especially for investment in green technology. Any of the stocks there that one can look at?
I think the entire battery and EV space, the stocks you should look at are the Indian stocks, which are the large manufacturers, which is whether it's Tata Motors or Maruti. Clearly, the market is making a call whether there's a significant near-term disruption. It's very clear there's definitely a long-term disruption because of batteries. So I would look at the large cap stocks, especially Tata Motors and Maruti, to see if anything has an impact on those.
Okay. Sandeep, my favorite question to all the experts today has been, your opinion on these high flyers, the Zomatos, the Nykas. They've got it in the neck because of the derating of multiples. But you think the time has come that they look attractive again?
Well, we have research reports out on some of them, so we have been very cautious as we know. And I will continue to remain cautious. I think there is definitely one very positive thing is that we have seen a widening of the market. We have seen new sectors come through. These are also sectors which have actually been spending in the last couple of years, and that's definitely good for the broader economy. They've also been hiring, which is also good for the broader economy. Valuations are a big question mark, and we can clearly see that Fed rates are going to rise, whether they rise by 50 basis points every time, or whether they rise by less than that is the only question now. So valuations across the board for this will definitely come under pressure.
Okay, Sandeep, we'll thank you on that note today. Thanks a lot for joining us. Well, just about 1 minute left for pre-open. We have our next set of guests joining us, Nilesh Shah, MD and CEO of Envision Capital, and Nilesh Shah, MD of Kotak Mahindra AMC, both joining us. Good morning, Nilesh Bhai of Kotak Bank, Kotak MF first. What's your key expectation, Nilesh Bhai, as we go into the budget? What would be the key thing to watch?
Is the budget supporting consumption, which is still below pre-pandemic level? Is the budget encouraging job creation through incentive to mass employment creating sectors like housing, textiles? And is budget funding this expenditure through raising of non-tax revenues like asset monetization without letting go the path of fiscal prudence?
Okay, that's putting it very succinctly. Nilesh Shah of Envision, now your turn. Good morning and thanks for being with us as always every year. I think it's been over 10, 12 years that I've seen you on the budget panel every year. This time around doesn't seem to be any different, but on the taxation front, one of the strengths of last year's budget was stability on the tax front. All fears of a new wealth tax were put to rest and there were some tweaks made. On that front, what are you expecting this time around? What do you think can cheer the market?
Thank you, Sonia. It's a pleasure to be on this panel of CNBC TV18. Well, it's very unlikely that any of these regressive measures like, wealth tax or any other kind of fresh taxes, or even hiking the current set of taxes, I think is extremely unlikely, given that the Prime Minister himself has said that, wealth creation is required for the growth of the economy and the nation. In fact, I would probably go a step forward and say that maybe, a couple of tweaks which could kind of, in a way, cheer investors and boost the markets could be that the 100,000 or 1 lakh rupees limit, which is there for long-term capital gains tax exemption, that actually be hiked. Or if, the dividends which investors receive in their hands is subjected to some kind of a higher TDS, and that's about it. And whatever the dividends investors receive net of the TDS is entirely tax-free in the hands of the investors and the shareholders. So I believe that if a couple of measures like these are taken, that's something which would basically bring a fresh round of buoyancy in the markets.
So Nilesh, good morning to both of you. Prashant here. Nilesh, you're expecting, something for investors, nothing to hurt, but maybe something which cheers them. Nilesh of Kotak, this is for you. Recently we had that, it was a technicality really, that overseas mutual fund investments, ETF investments and overseas equities, the limit was full up. $7 billion, which that limit was put about more than a decade ago. And there are expectations that will be increased. Will we hear on that? Do you think it'll be part of the budget or maybe, outside of it?
So undoubtedly, there is a need to increase the limit. We are sitting on $635 billion reserve. And if we can deploy some money in better yielding assets, that will be good for the economy. Now, whether this has to come out of budget, outside of budget, I'm not really expert on it. But I'm sure SEBI is working with RBI and Finance Ministry to enhance the limit for offshore investments by mutual funds beyond $7 billion.
Yeah.
Nilesh Shah of Envision now, this whole issue about the move in the IT versus banks, Nilesh, the last 15 days there's been a lot of sort of market chatter about whether some leadership shift has happened. Is it a bit of a tectonic shift or not? But the last couple of days, we've again seen the IT stocks make a bit of a comeback. Once budget is out of the way, what do you think would lead the market?
Well, I think the key data point in this budget is basically the number on fiscal deficit, because clearly in the very short term, banking stocks are going to move, keeping in mind essentially what's the fiscal deficit number, and would be responding to how bond yields move. But the key for banking stocks going forward post the budget is basically going to be all around credit offtake. I mean, credit offtake, the whole of last year has essentially been in low to mid single digits. And what is very critical for now overall the banking system is essentially for a very, very higher level of credit offtake. So that's the one. Two is our view is that if demand continues to sustain for IT services, and if digitalization, which is essentially a global phenomena, continues to sustain, and the kind of hiring which IT companies are doing, it looks like that calendar year 2022 is again going to be a very, very strong year for the business of IT companies. I believe a lot of valuations, premium which was there has come off. A bit of the froth has gone away. So they're beginning to again look attractive and expect that if the growth momentum sustains for IT companies, you would essentially see the value